Tesla's Q1 earnings, of course, came out on Tuesday, earlier this week. So in this video, we have a lot to cover. I will include timestamps in the description below so that you can hop around this video if there's particular topics you're wanting to find more information about, or there's just some things that you're more interested about from the earnings than others. Right, okay, so numbers. Let's cover that first. Obviously, not the best numbers they've ever posted. It wasn't absolutely fantastic. They missed both on revenue and EPS. We learned that total revenue fell by 9% from a year ago, and this was actually Tesla's first drop in 4 years. And remember that Tesla is split up into different revenue areas. So they've got their automotive revenue, they've got their energy revenue, and then they've got services and other. We learned that the total automotive revenue was down by 13%. However, both energy and the services and other category were both up. Now, I've spoken about this before, but Elon made it clear again in the earnings, and also he actually said this was going to happen like a year ago. But the reasons that the delivery numbers and earnings were both down is just because of factors that were a little bit out of their control. And also there was a real cyclical nature. There was a real cyclical reason as to why the both delivery numbers, like I said, and the earnings were actually less than what people were expecting. Now, with cyclical things, and we'll break these down in just a second, and things outside of Tesla's control that do impact numbers, you have to kind of think of this from a bit of a zoomed out view, because if you just look at it from what's happening right now, or when we get earnings from the previous quarter, it can be very panicking. You see these numbers and they're dropping and you're thinking, oh, it's going down and down and down. But you have to remember that these things are very unlikely to just keep occurring, to keep happening. With this certain situation that Tesla has been experiencing, loads of things sort of happened at once. It was like a domino effect, and that was really hard for Tesla to deal with. So what are these things that I'm talking about? Well, we had the Red Sea crisis happening, and this wasn't, only specific to Tesla. This impacted many, many companies. We also just had this seasonality. Seasonality does impact automotive companies. It's a given. And this ties into the macro as well. But we've also got demand. Now, I'm not sitting here and saying that demand has been absolutely fantastic. What has happened is the global battery EVs, the global BEV sales, have been under pressure recently. And the reason for this is because car makers have been focusing their efforts on actually producing hybrids. Tesla recognize this. They don't want to change their approach. Obviously, they will only make EVs. They will not make hybrid vehicles. So that will come and that will go. We then got to factor in the macro. And again, this is not Tesla specific. This is not industry specific. This is across the board. However, when interest rates are high and people are a little bit tight for cash, they are way, 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 way less likely to spend money on a high ticket item, like a new vehicle. If they are smart with their finances and they don't have that spare cash, they should not be putting that towards a high ticketed item, nor should they be getting out loans, or anything like that. Whereas if you've got a company in a sector like, for example, consumer goods, that sector might not be hit as hard during these macro pressuring situations and times, because they are giving products that are absolutely needed no matter what is happening in the environment. So those things are some things either affecting across the board, any sector, or the automotive sector in particular. However, on top of all those things, Tesla also had to contend with the attack on Gigafactory Berlin. This means that their production was impacted for a period of time, which of course does then impact their numbers. We also had the ramp up of Model 3 happening as well. So we found out that the delivery numbers that Tesla has recently posted were not all that great. They weren't as good as they have been in the past, and they didn't meet expectations. And we knew this due to all the reasons that I've just mentioned. And this, of course, then got reflected in their earnings. So people that knew about what was happening with Tesla, that was following the news, keeping updated on their positions, and they understood the reasons as to why the delivery numbers weren't going to be as good as previous quarters, they were prepared emotionally and strategically for Tesla actually to come into earnings and not produce the most incredible earnings they ever have, because they knew what was happening behind the scenes. They weren't just reading headlines and freaking out. But even so, even with these earnings being a little bit weaker than we've seen before and numbers not coming in as strong, this stock actually still jumped up by 13% or so after hours. How and why? Well, I think it's actually really simple as to why this happened. I think it came down to the presentation, the call, and the Q&A actually being really informative optimistic, and a lot of information was given for investors to actually start getting really excited about. So let's talk about that. Firstly, Elon's performance. I think he did a fantastic job this earnings. Sometimes in the past, both heavily invested Tesla shareholders and people that typically critique the stock and aren't that bullish on the stock have said that Elon has sometimes been a little bit unclear. But I think in this call, he gave both clear and confident answers. And I think investors found it really, really reassuring to actually hear that he is still really committed with Tesla and that Tesla are on track and they're going to keep pushing forward to achieve their bigger missions. The automotive revenue was not the highest. Clearly that has taken a hit. I do think that will start to pick up though as we move, out of the factors that I discussed at the beginning of this video, but there were some other revenue wins in Tesla's other business sectors. Of course, I'm referring to the energy segment and then their services and other segment as well. Energy generation and storage revenue went up 7% year over year. And in Q1, they had record energy storage deployment numbers. Most of this increase was driven by increased mega pack deployments. The demand for mega packs is really, really strong. It has been for quite a while. I still think energy is a really slept on area that not many people speak about because it's not as exciting as perhaps other areas, but it's here to stay. It's growing, but their solar segment isn't as strong. It's not doing the same numbers, and I don't really know where that goes in the future. I'm sure they've got a plan, but mega packs and energy storage, very, very exciting. The rate of growth of Tesla Energy is actually quicker than that of their vehicles, and I don't think many people recognize that. And of course, we can't forget that energy at the moment is their highest margin business. But I'm really excited to see how Tesla's margins actually develop moving forward, especially as we start to see FSD revenue play more of a role and Tesla makes this shift to actually having more SaaS margin businesses. Very, very exciting stuff. And then the services and other segment revenue went up by 25%. We know that they are growing their supercharging network extremely well. They're popping up left, right, and center all over the place, and they are actually making it so that people that want EVs that previously had range anxiety actually don't need to consider that as a problem anymore. So the revenue from the charging and from other services was showing up in this Q1 earnings report. And then I have to ask myself, what's going to happen in 2 years' time, 5 years' time, 10 years' time as they continue to expand this even more and other companies are wanting to utilize the Tesla supercharging network? How is the revenue going to look then? Because this is already starting to happen. And remember, they are also now selling the actual hardware. So we have a lot to get excited about when it comes to energy and their services business outside of the automotive portion. But when we're looking at the Q1 presentation and we're actually analyzing the numbers, right now, the automotive revenue still accounts for about 81% or so of that total revenue. So although, I firmly believe that Tesla is not just a car company, at the current time, they are getting the majority of their revenue from actually the vehicle sales. We'll talk about that more in just a minute. However, in Q1 2022, so 2 years ago, this number actually sat at 90%. They were getting 90% of their total revenue from their automotive segment. And then in Q1 2023, so 1 year ago, this sat around 86%. And like I said, now it's about 81%. So it does seem to be declining. Tesla does seem to be becoming less reliant on just the sales of their vehicles. And that's what we expect to see happen as the other business areas start becoming more substantial and start growing quicker than that of the automotive segment. And then this leads nicely on to how we think about Tesla. What sort of company is Tesla right now? What sort of company are they going to be in the future? If you think that Tesla is just a car company and that's all they're ever going to be, then you're going to value the stock like that. You're going to value it as a car company. But if you think that they already are or they will be more of an artificial intelligence and robotics company, then you'll probably agree that the percentage of revenue coming from selling cars will greatly decrease as time goes on. And this was actually made clear in both the presentation and by Elon on the call. So in the presentation, we had this nice picture here, and this is something that I've hoped Tesla would make for quite a while. The Tesla ecosystem. You can see here selling EVs is just one part of their bigger plan and ecosystem. On top of this, we have humanoid robots, i.e. Optimus, energy, lithium refinery, FSD, which then leads on to the fleet and the app, which we'll talk about in just a minute, and much, much, much more. And I don't think their ecosystem is going to be static and remain like this. I think this is only going to expand, and this is just a small section. And when we look back at their ecosystem in 20 years, there's going to be many, many other things around what we're seeing now. Then during the call, Elon actually made some comments about how people view Tesla. And he said Cathie Wood said it best. And that is that Tesla should be thought of as an AI robotics company. He said if you value Tesla as an automotive company, you simply have the wrong framework. If you ask the wrong questions, then the right answer is impossible. So I think he's saying there that a lot of people still, especially maybe Wall Street analysts, are thinking about Tesla in the completely wrong way, the complete wrong context, because selling vehicles is just one tiny section of what they are going to be doing. And even their EVs are literally robots on wheels. So even if you look at just what they're doing right now, they are still heavily invested and involved with AI and robotics, even if you remove the possibility of Optimus. Then we had some new information. There were little things that were hinted at, little things that were sprinkled in that were very, very exciting. First up, we learned that Tesla produced over 1,000 Cybertrucks in just one single week in April. This shows us so well that the ramp up in Cybertruck production is happening. And there are still like 35 weeks left of 2024, 35-ish, give or take. I'm going to say 35. So as this continues to ramp up even more, how many Cybertrucks will they actually have produced in the whole of 2024? And I'm still seeing photos of celebrities with big social media platforms, massive reach, showcasing their Cybertrucks. This was happening a while ago, but this doesn't seem to be slowing down, and it definitely hasn't stopped. It feels like there's a status, there's a cool symbol attached with owning a Cybertruck. I kind of think it's the same like back when the iPhone started first coming out, and it was almost a symbol of status at first. Status. That's not really the case with iPhones necessarily anymore, but it does feel like that with Cybertrucks. Whether you think that they are the ugliest vehicle or not, people want to show them off. And that has to stand for something. So what other new information did we get? Well, we actually got a picture of what Tesla's Robotaxi app could actually look like. It looks really, really good. And I know that this is only a picture of what it could look like, that they may make changes. But I think this really helps people visually seeing it actually understand how Tesla's Robotaxi fleet could really interrupt and compete with the likes of Uber and Lyft. I'm really, really excited to see how the Robotaxi will start to take place. And as I spoke about in my previous 2 videos, I think this is going to take some time, and it's not going to be easy breezy, lemon squeezy. It's going to be very, very difficult, and there's going to be a lot of hurdles to overcome, but I think that they will get there. And when they do, I think this is going to be a really, really big cash generating machine. I think it's going to be huge for Tesla. I've made videos on it. I'll link them. I'll link one of them up here if you do want to check it out and learn more about that. Talking about how I think that Tesla will actually compete with the likes of Uber when they've got their Tesla Robotaxi fleet up and running. Interestingly, Uber stock actually fell by quite a substantial amount on the release of this information. So clearly other people are thinking, hang on a minute, what's going to happen with Uber in the future when this is actually taking place? We also heard Elon say that you can think of Tesla's Robotaxi fleet as a mix between Airbnb and Uber, which sounds a little bit weird, but he said that there will be some cars that Tesla own and operate within the Robotaxi fleet, and then there will be some cars that are customer-owned Teslas that the customer can actually decide to and when to add their car to the fleet, if that makes sense. So like I've explained on previous videos, basically when you have a Tesla vehicle that can be added to the fleet, you can basically say, I'm not going to be using it between these times. I would like to add it to the fleet. It can be used, and then you can actually earn money from doing that. This is in line with what a lot of people, including myself, thought would actually happen. And it's a really, really cool business idea and business model. And I do think it will encourage a lot of people to own Teslas because you can make money from your vehicle when you're not using it. And actually that is the majority of the time. Most of the time, your car is sitting parked at work or parked on your drive or on a road or in your garage. It is not being used, so why not make money during those times? The car can pay for itself. Oh, and he also used the word Cybercab to describe the new purpose-built Robotaxi. Did anyone else pick up on that? So it seems like the purpose-built mass affordable vehicle, that 25k car, whatever you want to call it, the compact car, the car specifically designed for the Robotaxi fleet will be called the Cybercab. I mean, that would be my assumption from what he said. Further details will be released on the 8th of the 8th. Very, very excited about that. But I'm still not sure, and there was no real details given on how many seats will be in this Robotaxi Cybercab vehicle. Will it be a 2-seater? Will there be multiple product lines where you can have a 4-seater, a 2-seater? I still don't know the details of that. Very excited to find out on the 8th of the 8th, hopefully. And then we had this, very, very interesting. They said, we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. These new vehicles, plural, vehicles, including more affordable models, so multiple affordable models is how I'm reading that, will utilize aspects of the next generation platform as well as aspects of our current platforms and will be able to be produced on the same manufacturing lines as our current vehicle lineup. So what I'm understanding here is that the new car or cars can actually be built on the existing production lines that Tesla have. And what does this mean? Well, this means that they can move a lot quicker. They can have a much faster ramp to production. Overall, the cost will be lowered because it's not new. There'll be bigger margins. They can hopefully then pass those cost savings on to customers and the vehicle can be cheaper. They then said this update may result in achieving less cost reduction than previously expected, but it enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. This would help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines. Our purpose-built Robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy. So that is some really bullish and really exciting information for sure. But, let me know what you think. What do you think they mean by new products? Tell me in the comments below. I'd love to hear your thoughts on that. But what a big slap in the face that was. Not a slap in the face to me, or probably not to you, depending on what you think about Tesla, I guess. But because just a few days prior to earnings coming out, or a few weeks, God, time gets mixed up really easily. There was a whole article, remember, that came out saying that they have cancelled their new mass affordable product line. So that was Elon's way and Tesla's way of saying, hang on a second, stop telling lies. I think a lot of us knew this before the earnings call, but if it wasn't clear then, it really, really is now, that Tesla are really, really doubling down and taking autonomy as seriously as they possibly can. They really want to push this forward. In the presentation, they said, since the launch of FSD version 12 earlier this year, it has become clear that a vision-only architecture with end-to-end neural networks trained on billions of miles of real-world data is the right solution for scalable autonomy. Tesla have approached self-driving vehicles quite differently to other companies that are also working on a solution for this. But what they are saying now is that their approach seems to be the perfect fit for actually having scalable autonomy. And that's what it always seems to come down to with Tesla. They do things slightly differently from a standpoint of working off first principles, and all of that allows them to actually scale a solution. And that's where other companies, I think, really struggle because, and we've heard Elon say this before as well, it's quite simple, I use simple very lightly there, to produce a prototype of a vehicle, of a robot, of whatever it is. But to actually scale and mass manufacture is a completely different game. And I think that's one of the reasons Tesla really, really have an advantage. And in Q1, they also completed the transition to hardware 4. And this is a really good reminder actually of when we're seeing the stock go down a little bit or up a little bit on any given day, it's not really necessarily reflecting what they're actually working on and what they're actually achieving behind the scenes. I've said many times on this channel, the intrinsic value of a company can sometimes be very, very different to what the stock price is showing. And something else about FSD that many of us may already know is that actually they've reduced the subscription price. So they've already reduced the price monthly to $99. I think this is in Canada as well. But they've also reduced the purchase price if you're making a one-off purchase to $8,000 in the US. Why have they done this? Well, to increase adoption. They want as many people as possible using FSD. Why do they want this? Well, firstly, it means that more people can see how good it is. Then more people can want it for the future if they do decide to increase the prices. But also it gives them more data, more information to then improve FSD. You know, it's benefiting them as well as us. Elon said on the call that everyone should try FSD and see what they think, especially all investors. Now, I wish I could say that I'm an investor that owns a Tesla and has FSD. Unfortunately, neither of those are true for me right now. I don't own a Tesla. I hope to change that as soon as I possibly can. And of course, I'm based here in the UK. We don't have FSD. But if I'm in the US anytime soon, I would absolutely love for someone to show me how good it really is in person, because I've seen many videos of people in the US on X sharing their experience. It all seems to be incredibly positive at the moment. It's made such good improvements over the last year, few months especially. So it seems to be incredible. And I kind of want to experience that for myself. So it seems like both people owning Teslas that are using FSD and Tesla themselves are liking what they are seeing when it comes to FSD. And I think Tesla are very confident, getting very confident now on what this can seriously do. We also learned that the miles driven with FSD beta as of the 21st of April 2024 was around 1.3 billion miles, which is absolutely insane considering around the 12th of April, it just had crossed over that 1 billion mark. So now it's at 1.3 about 11 days or so later. So you can start to see, literally looking at the numbers, that this growth is really taking off, just like we said it would. You know, they have so much data to train this on. They have the data advantage. And there was always going to be that point in time where the graph sort of went like that. And that's exactly what we're seeing. Now on to Optimus. I don't think we received overwhelming amounts of information on Optimus. I would have liked more, but this was a great earnings in terms of what information we were given. So this is just me being particularly greedy, I guess. I do anticipate that we do another Optimus video. So hopefully we can learn more about the progression that's happening with humanoid robots within Tesla very soon. He thinks that Optimus will be doing useful work within Tesla factories by the end of this year. And then he went on to say that possibly they will be able to sell Optimus externally to other companies to maybe work in their factories by the end of next year. He made it very clear that this is just a prediction. Please don't run away with these numbers as people maybe have in the past. He's very known for being to give very bullish timelines, and he's not always able to meet them. So I think he's trying to lower expectations there just in case. But very exciting. Regardless of when it happens, in my opinion, it's going to be a humongous opportunity like no one has ever seen before. And then at the end of the call, we learned that Martin, who is the chief of investor relations at Tesla, would also be leaving the company. And this was particularly sad because obviously he is someone that a lot of investors have interacted with in the past, and it's always sad to see talent leave the company. I do think he is sticking around for a few months longer though, so it should be quite a smooth transition. And then there was a question that was delivered to Elon Musk, I think from an analyst, I believe, about the 25% voting power that he wants and the compensation package and what that would mean for Tesla moving forward, depending on the outcome of that. He said a few things about this. Obviously, this is quite a difficult question for him to actually answer, and I guess he kind of has to tread carefully, like legally speaking about his answer. I'm not sure, I would assume that. But he did say if the company, meaning Tesla, generate positive cash flow, they may be able to buy back shares. So that is one potential mechanism in which Elon can get his 25% voting power if the vote doesn't go his way. Very interesting. Tesla buybacks. Let me know what you think about that in the comments below. I am going to make an entire separate video on the revote that's happening and Elon's compensation plan, because I think it's incredibly important that all investors are aware of this and know exactly what's happening and actually understand what's happening so that they can make a vote. But he did say that right now, if he disappeared completely, I think his words were if he was abducted by aliens, there would be enough momentum that has already been built for Tesla to actually be the ones to solve autonomy. But he also kind of said that there is so much more that Tesla could achieve in the future beyond just autonomy, obviously with him around. I don't know if anyone else really picked up on this, but I enjoyed the regular biology tangents that were made during the call. That's my background. My background's in biomedical science, so I very much enjoyed that. But I do recommend any investors watching this video that weren't able to tune in to the earnings call or didn't really bother because it's quite long. Well, firstly, I hope that this video has been informative and I've picked up on the main points. But if you do want to listen to the entire call and the entire Q&A and actually hear everything that Elon said, I would recommend that you go and watch Farzad's video. I'm sure you're familiar with who Farzad is if you're in the Tesla community. I will leave a link to it up here. But he basically produced an edited, condensed version of everything Elon said, so you can get all the information as quickly as possible. But in terms of the future and what happens next, well, I think firstly what we're going to see is that their second quarter is much nicer than the first has been in terms of numbers, because we've had the decline in sales. I don't think that's going to continue. I think there was clear reasons as to why that was happening. Again, I spoke about this at the beginning of this video, but I do think that the future for Tesla is going to be bright. I still stand by that. My conviction is still the same as it was before the call. If not, it's only got stronger. I think we've seen a very interesting thing actually happen. I think we've seen the sentiment vastly shift from before the call to now here after the call. I think we're really starting to now be able to see the roadmap that Tesla are planning, and we are just at the very start right now. There are still many hurdles for Tesla to overcome. It's not going to be smooth sailing, but there is so much potential in my opinion for this company, and it's a very exciting company to keep talking about and keep following. I just wanted to quickly say that I've noticed that some of you have actually decided to become channel members. That is a fantastic way to support me, and I'd like to just quickly say to you guys that have become a channel member recently, and you guys that have been a channel member for a long time, thank you so much for that support. But if you can't join the Patreon or become a channel member or anything like that, don't worry at all. Just you watching this video, commenting, liking it, sharing it, that's incredible support. But if you do want to understand more about the potential of Optimus that many Tesla investors are seeing, watch the video on the screen now. Thank you so much for spending some of your time watching this video. I'll see you in another video very soon.